Day and welcome to another episode of the Bindu Business Podcast. On today's episode, it's actually something new. It's actually more of a masterclass. So with me, I've got Ignatius Manganye, who's actually here to educate us on a bit of tax. So this is our first episode where we're actually giving businesses information on how to do things easy. We're still going to have more masterclasses on marketing, invoicing. So this is the first of many. And this is actually on tax, since it's actually tax season. Hello, Ignatius, how are you?
I'm good, and how are you?
I'm good, man. Thanks for joining us on the Bindu Business Podcast. And by the way, you actually have a tax consulting company.
It's Bindi Consulting.
Yeah, it's quite a mouthful. So I'll actually put it down. You'll actually see it here on the screen. You can also contact him if you've got questions regarding tax as well. It's actually tax season in South Africa right now. So Ignatius, what is tax?
Okay, basically tax, I'll just put it in layman's terms. Mm-hmm. In each and every country, I would like to believe there is a tax system that the government imposes on individuals and businesses. So in South Africa, the South African Revenue Services is the one responsible for collecting tax from individuals as well as companies. So tax is basically a revenue for the government, which is collected through individuals and companies. So as an individual, when you are employed, when you work, I'm sure all of us know that when you are above a certain threshold, then you start paying income tax, which is what we call pay as you earn, which is payee. And then the company that you work for has the responsibility and the honors to collect tax from the employee on behalf of SARS. Then they pay it off to SARS. And then if you are a company, you also get taxed, and there's different tax types. So there's like your income tax, which is what a company pays from the turnover they make. Obviously, there will be issues like it will be turnover and versus deductible expenses, expenditure that the business makes. And then there will be taxable income. And then with taxable income, there's tax rates that the South African Revenue Services applies according to the tax laws as per the Income Tax Act. So for companies, the tax rate is currently at 28% of taxable income for companies. So you pay 28% of tax to SARS.
Okay.
As a company, yes.
And why do we have to pay this tax? It seems like nobody likes paying it, but why do we pay tax?
Okay. Yeah, it's not a nice thing.
Yes.
I'm sure for the greater part of us, no one wants to pay tax. But tax is as a result of, it's actually a revenue generating system for the government. And then when we pay tax, the government takes the tax money to use it on certain services that they must deliver for the public, for the people in the country. So, for example, the government uses tax to pay, for example, government grants. There's your old age grant. There's different type of grants that the government is paying. They take it from tax money, and the government uses tax money to also run the other issues of the country. For example, with infrastructure, building the infrastructure of the country, basically running the country.
Yes, healthcare.
Yes, healthcare, when people get free healthcare services, it's from the tax money. You understand? Yes. So basically the government uses the tax money to run the country.
Okay, perfect. Yes. So I heard you mentioning a couple of words there, like taxable income. So how does this income tax work for small businesses and companies? I heard you also mentioning something about, yeah, it's taxable income, and you were giving me figures like about 28%. So can you explain that in, like, how does it work? Let's just say maybe I've got a business, and how does this tax come into play? This 28% and all this other stuff. How do they come into play?
Okay. When you register a company, once you register a company, you're already obliged to pay tax. You're already obliged to become compliant with tax. So there's a whole lot of, it's just that today maybe we might not have enough time to go deep into the tax law and all that. But if I might to summarize it for a company, when you register a company, you are already obliged to comply with tax laws. You are obliged to pay tax if liable. So there's a company which is maybe I can just put it as a large company, and then there's SMEs, which is small medium enterprises. So with the tax law, when you're a small medium enterprise, there's certain tax tables that you fall under. There's certain calculations and rates that you pay as tax. You understand? And then when you are regarded a company, you pay tax at 28% of your taxable income. And then let me come to taxable income. Taxable income is basically when you run a company, you make money, which is turnover/revenue. Then when you make that revenue, you're obviously going to have your business expenses. You're going to pay salaries. You're going to pay rent, so on and so on. To be able to, you're going to have those expenses to be able to run the ordinary course of business. So when we calculate your taxable income, we're obviously going to take your revenue into place, and then we deduct all the deductible expenses that are business expenses.
Okay, let's come up with an example here. So let's just say I'm selling acha. For those who don't know what acha is, I think it's chutney. If we've got, I think it's chutney. I'm not quite sure. Just in case we've got people who are watching this or listening and they are not South African, they don't know that word acha. So let's just say I've got an acha business. No? So in this business, I need mangoes. So I'm going to buy mangoes.
Yes.
I'm going to buy spices.
Yes.
I'm going to buy the most expensive thing of all, cooking oil, I think. Yes. So that's what I need for my business.
Yes.
And let's just say I've got 2 employees as well. I've got a machine for cutting. Okay, let's not go into that one. But yeah, so those are the products that I need to make my finished product and sell it. Okay, perfect. So I'm going to... Okay, let's just come up with let's just say all these things cost me, let's just come up with a small scale and say maybe these things cost me 200 rands, ne?
Okay.
So all the things I bought to make this acha cost me 200 bucks.
Yes.
Okay. This will include the packaging and everything. Let's just keep it simple. The packaging as well, all my expenses.
Yes.
And the acha, the people, my employees, let's just come up with a small figure, maybe 250. It's too little to pay someone 250. But let's just, for this, let's just say you pay them 250.
Yes.
Okay. And your expenses were 200, right?
Yes.
I mean, yes. So I've sold acha and I've made about, let's just say 1,000.
Okay.
So do they tax the 1,000? How does it work? Am I taxed on that 1,000 that I've made from all my sales? Or how do they calculate this amount which they're going to tax me?
Okay. So what they're going to do, they take the 1,000 that you made, and then they're going to deduct the expenses that you incurred in running your business. So those would have been your salaries, as you've mentioned, and your cost of sales, which is the material you would buy to be able to produce your product. So if I calculated correctly, it should have been 700 that you calculated.
Okay, how much did I make again?
You said 250 for 2 employees.
Yes.
So it's 250 each if you
Yes.
so that was like 500 and then you said 200 rands for buying the mangoes and everything. So that's like 700.
Yes.
So you're going to take the 1,000 and deduct the 700 and then 300 is going to be your taxable income.
Oh, so they don't tax me on the 1,000, they tax me on the 700, on
the profit,
on the 300.
Yes, on the net profit
after I've paid all my expenses. And okay, perfect. And let's just still use the same case. How does PAYE, pay as you earn work in this case? Because I guess when you have employees, you have to pay tax to SARS for each employee. So how does that one work?
Okay. When you employ someone, firstly, I want to break it down properly so that's understandable. When you employ someone, the first thing that you are going to do to be able to comply with law, when someone works for you for more than 24 hours in a month, you need to register them for UIF. It's law.
24 hours?
Yes, if someone works for you for 24 hours or more in a month, you need to register them for UIF.
So if this person just comes in maybe once a month and maybe they are just working for 5 hours a month, I don't have to register them for PAYE?
Yes, if it's less than, I'm going to come to that one.
Okay.
Yes, I'm coming to that one. But I just wanted to start with UIF, which is the Unemployment Insurance Fund. So if someone works for you for less than 24 hours in a month,
for more,
or for, let's say, for less,
okay,
you are not obliged to register them for UIF. But when they start working for you for 24 hours or more in a month, then you need to, it's law, it's compulsory, you need to register them for UIF. And then UIF is the rate is at 1%. So the employee pays 1% of their gross salary. Let's say their gross salary is 100 rands. And then 1% of that, it would be 1 rand. Then over and above that, you are going to, the employer also pays 1% of the employee's salary. So the amount that is going to go to SARS is going to be 2% of the gross salary. So now it's going to be the 1 rand from the employee and 1 rand from the employer. So it's going to be 2 rands that you must pay over to SARS. You must declare returns. You must pay over such that in the case where an employee loses their job in one way or the other, whether it be from you firing them or a contract has ended or for whatever reason whatsoever, then they will need to go and claim UIF from the Labor Department. So although when someone resigns, when you resign, you're not entitled to claim UIF. Yes. So that's the starting point. I'm trying to build a picture where you are an employer or you run a company, then you employ your first employee. I'm trying to get to the point, what's the steps you're going to follow. Then secondly, when it comes to pay as you earn, which is the question you asked, that one, there's a tax threshold that gets amended. Tax law gets amended annually. Each year when the Minister of Finance presents the budget speech, they amend the tax regulations annually. So they're going to amend how we're going to calculate tax, what rates are we going to use, the tax tables we're going to use, and then obviously there's issues of how much grant is going to increase by, so on and so on. What's the budget for health? What's the budget for education and so on? Each year that happens. So pay as you earn, there's a threshold. By threshold, I mean there's a certain salary. When you earn up to a certain salary or less, you don't pay as you earn.
Which one? Which amount is that at the moment? This is in 2022. So
okay, I think I would like to believe currently It's 83,000, if I'm not mistaken.
Okay.
Yes. Currently it's 83,000, if I'm not mistaken. So you just take that, it's annually. So you just take that 83,000, you divide it by 12. So 83,000 divided by 12 should give you a figure around about 7K, if I'm not mistaken.
So if you earn less than that, you don't pay tax.
Yes. If you earn that or less than that, you are not obliged to pay tax. But once you exceed the tax threshold, then that's when you start paying, you start attracting pay as you earn, which is income tax.
Okay.
Yes.
And the company pays my income tax, right? I don't pay it myself.
Yes, the company is obliged. It's basically an agent of the South African Revenue Services to collect tax on SARS behalf and take it to SARS. So what they do is when they have to pay your salary, if you earn 8,000, for example, and then maybe pays you earn to be 500. I'm just making an example. It's not correct figures.
Yes.
SARS must deduct. No, the company, sorry about that. The company must deduct that 500 from your salary and they must pay it over to SARS. So they declare and pay it over to SARS on your behalf.
Yes.
Then
Why
they pay
can't
you
I
the
just
net
why can't I just do it myself? They give me the money and I pay SARS at the end of the day. Why doesn't it happen like that? Has it ever happened like that in the beginning?
It has never happened like that.
Okay. Why does it, if I may ask, I know it's quite a stupid question, but why doesn't it happen like that?
I don't think SARS trusts the employee. Because SARS, at the end of the day, they want to hold someone accountable.
No.
So they don't want to hold you accountable. They will hold the employer accountable.
Okay. Yes. Have there been any cases where some companies have been doing some dubious practices and not paying SARS taxes? And they actually say they're deducting them, but they're not actually taking them to SARS. Have there ever been, are you aware of any such cases like that?
Yes.
Okay. What happens in such a case?
It's just, the South African tax law. It's a law that was passed by government. So like any other law, when you go on the wrong side of the law, you face the law with any other person. And of course, according to the law as how certain issues are dealt with, it might lead to maybe a fine, to, anything that the law can attract.
Yes.
Ultimately, it can also attract imprisonment.
Yes. How does it affect the employee though? Let's just say the Archer business I gave you, I gave an example of. So I've got these two employees and on their pay slip, it says that I'm taking 50 cent and I'm giving it to SARS, but I'm actually not doing that. I'm actually not doing it. How does it also affect the employees? When it's time for them to do their tax returns, I don't know what happens in this case. If are you aware of such cases?
Okay.
Yeah.
Okay, I'm going to put it like this: when a company has the responsibility, if it has employees that earn salaries that are supposed to attract both UIF and pay as you earn. There is the responsibility to register for the tax type, which is pay as you earn. After registering for that tax type, they have the responsibility to file returns every month. So payroll returns. So we call them EMP 201s. So that's employees tax. So the company has to file. For example, if the company knows that from the employees, I need to pay SARS 1,000 for the month for my employees. Then they need to file that return to say 1,000 is due to SARS from what I've deducted from the employees and from what is supposed to be paid to SARS. Then after filing that return, which is one of the regulations to say you must comply. You must comply first by filing, basically first by registering, because even if you don't register and you're supposed to register, you are on the wrong side of the law. Secondly, by declaring the returns that you're supposed to declare to SARS. Then thirdly, by paying the liability that will be due from the company to SARS.
No,
You understand?
yes.
So the company has to meet all those criteria. But if the company does not do that, it's going to affect the employee by saying the employee won't be recognized at SARS and the employee won't be able to file their income tax returns. There will be nothing there to file.
Yes. You know what? This takes me back to when I got my tax number. It was a long time ago. But does your company also do help people with getting tax numbers or stuff like that? Let's just say in my business, I've got someone who's they're still young. They don't have a tax number yet, so they haven't been paying taxes. So does your company also help with getting people tax numbers? And where do people actually get tax numbers actually?
Okay. Back in the day, before we came to the time of COVID and I almost so said the New World Order.
Yes.
Yeah, but we've shifted a lot and then on how the world operates and how we live as human beings. But before, you would go to SARS and get a tax number. But currently, it's not easy just to walk in to a SARS branch. So my company does assist in people getting their tax numbers. Currently, the system has sort of moved to an online system, more over to that contact system that was previously used, where people would use to go to SARS directly to the branch and address a consultant directly, so on and so on. The system has sort of moved to an online-based environment, and then my company, which is the system that we use, and we do assist in registering an individual for income tax, or even if it be a company for income tax, for them to get a tax number, and then obviously putting them in a position to be able to comply with SARS in terms of filing their returns, as well as having to pay SARS, or in a better off scenario, if you have to get a refund from SARS, that my company assists in you able to do those kind of claims or returns or paying SARS.
Okay, cool, perfect. So I'm a businessman,
Yes,
and my company is making, let's just say I'm making a lot of money.
yes.
Is there a way that I can, there's tax avoidance
Yes,
and tax evasion. Evasion is the illegal one, right?
yes.
Yeah, okay. Maybe you could just tell us the difference between the two before we go to the next question that I wanted to ask you. But maybe you can just explain to us what is tax avoidance and tax evasion.
Okay. Let's start with the illegal one.
Okay. Yes.
Yeah. Tax evasion, the illegal one, is when you use measures that are not within the law to avoid paying tax.
Like putting my money under the mattress, does that count?
Yes, it does count, because according to the Income Tax Act, you're supposed to declare every money that you make. For example, even if you have tenants in your yard, then they're paying you rent. That's income that's supposed to be taxable, that's supposed to be declared to SARS. So most people, you don't even declare that income to SARS. You're basically ripping SARS off. And it's a punishable offense if they were to get to the point where they investigate that and then they see you making income that you're not declaring to SARS. It is a punishable offense. People use a whole lot of measures to do illegal ways to run away from tax. That's tax evasion.
Okay.
But with tax avoidance, it's a legal way to avoid paying high taxes, or perhaps to avoid paying tax at all at certain instances, based on how those legal measures that you would have put through would work in your favor. So there's legal ways to avoid paying tax.
Yes, and which ways are those actually? I think that comes to my question. I was about to ask, how do I pay less taxes? Because you know what, we see this in movies where people take their money to some offshore accounts where they are not taxed. I think April also does a bit of tax avoidance as well.
Yes.
So what are those? But I actually want to bring it down to the small business here.
Yes.
Like I want, how does Tsepo who's selling acha or mapula, how do they also find ways to pay less taxes?
Okay.
The legal way, obviously.
The legal way, yes.
Yes.
Of course, SARS wouldn't be happy
Yes.
for me to be advising people on legal ways to run away from tax.
It's legal ways.
Yes, it's legal ways, but they want you to pay tax.
Okay.
But there are legal ways from running away from tax. I won't touch a lot on it, but if you come and consult with my business, and then obviously we'll look at it in a more detailed manner, extensive manner, and a tailor-made way for your business, because also businesses are different.
Yes.
So obviously on turnover tax, which is income tax for companies, the best way you run away from tax legally is by your expenses. So for example, if your expenses are more than your revenue, it brings you to a loss. So when you make a loss, you're not obliged to pay tax on that loss, because you can't pay tax on a negative.
Yes, I was actually about to ask you what happens if my business is not making money. With COVID, a lot of businesses were not being profitable. So I actually wanted to ask you about that, but you've actually answered that as well.
Yes. So a non-profitable business, which is a business that is making a loss, does not pay tax. And the great part about that is that you get to carry over the loss to the other years, to the following years. If you made a loss of 10,000 in this financial year, you can carry it over to the next tax season. So let's say this year you make a loss of 10,000. Next year you make a profit of 7,000. Then there's a term that we call assessed loss as per assessed loss as per SARS, the Income Tax Act. So on the next year, when you make that profit of 7,000, you use that assessed loss to say, I'm taking from my loss, and then this 7,000, I'm using my loss to cover this 7,000, so I'm not paying tax.
Okay.
You understand?
I guess if people, excuse me, I guess if people want more information on that, they can actually consult with you.
Of course.
Yes, we'll put your details below, so on how people can contact you.
Definitely.
As well. Perfect. So there's also this type of tax. Let's say someone in Lesotho
Yes.
wants to sell, let's just say bananas. They want to sell bananas or mangoes or whatever. They want to sell it to South Africa.
Yes.
Are there any things they have to do there? Are there any taxes involved, or can they just get me here and then they sell me stuff, or sell ShopRite stuff, or sell any company stuff? Does SARS become involved in this transaction of a Lesotho company selling something to SA?
Yes, definitely. SARS does get involved. There's what we call import duties. So there's import duties tax, which is taxed on the imports that come from other countries to South Africa. Then SARS does tax on that, although it's a topic that we can maybe look at extensively, maybe in another episode or so on and so on, or if we have limited time, or if someone wants to consult me on that, I can definitely extend on that. But yes, you definitely do pay. They definitely have to pay import duties. Yes.
Okay, perfect. Yes. There's one word I asked you about provisional tax. What is that actually?
Okay, provisional tax is supposed to be filed, declared, and paid every 6 months.
Okay.
Yes.
It's not yearly, annually.
No, it's not annually.
Okay.
It's every provisional tax is every 6 months.
Okay, what is provisional tax then? Because this, I know for the employee, for the income tax, it's once, July.
Once a year, yes.
Yes. So what's the difference between income tax and provisional tax then?
Okay, provisional tax is basically, for example, let me use a company. If you are running a company, and then there's what we call there's income tax, and there's what we return that the companies must file, which is we call an IT-14. So each year a company must do financial statements on turnover versus expenses, how much they made profit, if they made a loss, or if they made a profit, how much tax they must pay to SARS, and they must submit those things. But every 6 months, SARS wants you to make a provision to say, in this 6 months, maybe I've made this amount of turnover or profit. And then it also wants you to also project to say, in the next coming 12 months, for example, I would have made this much turnover or profit. Then you sort of estimating the tax that you are supposed to pay to SARS, but obviously based on current values. You see, before you get to a point where you file the IT-14. Then when you make that estimation to say, I'm estimating that it looks like I need to pay 1,000 in tax, then you file that provisional return, and then you pay SARS actually. You say, okay, it looks like I will have to pay 1,000 for this tax season. Then here's the return. Let me pay you this 1,000. You pay, for example. Then when the actual season ends, then when you have to file the actual return, then you find that, for example, I had to pay 700. When the actual calculations come, then SARS will say, you paid us 1,000 and you had to pay 700. We owe you 300 rands back.
Okay, that's
then
good.
That's where they will give you the 300 back. Or you had to pay 13,000, but you estimated that you think you must pay SARS 10,000. Then you pay SARS 10,000. And then when they find out, then when you declare the actual thing, then you have to pay them 13,000. And you're 3,000 short, then that's where you pay them 3,000 that you underpaid them by.
Okay, perfect.
Yes.
And when we see on the newspapers and the news, usually we find a lot of people, celebrities and all these people owing tax. They owe SARS, they have to go to court and all this stuff. How does that happen? I don't want to mention names, but there are some celebs in South Africa, actually globally. I mean, we've had lots of people who been in the States, I think it's the IRS, people have been owing the taxman money.
Yes.
Yeah, so how does it happen that someone owes SARS? How does it get to that point that we find all these people are owing SARS money?
Okay. There's a lot of situations or factors or scenarios that can get one into such a kind of a situation. Maybe I can start with the first one. The first one is not complying, as we mentioned earlier.
Yes.
There's companies that find themselves in a position where they register companies, they operate. And then because they don't have an accountant or they don't even take this thing into priority, then they don't declare taxes. People making millions and millions, but they don't comply with SARS. They don't file their returns. They don't have an accountant. They don't pay tax. They just make their millions, utilize them without thinking about SARS and the tax law. You understand? They find themselves in a situation where SARS now comes to say, maybe after a number of years, you've been eating those millions, operating your business, and they come, they say, but you haven't been complying with the tax law. You've been making money, running your business, utilizing this money. You haven't been paying the tax as you were supposed to be paying it. You understand?
You know what? Now that you mention it, you said if someone works for how long for me?
24 hours.
Oh, so this wouldn't apply. Let's just say I'm a DJ. So I go and I play somewhere for 1 hour. So they don't have to register me for PAYE and UIF because I'm just there for an hour. I'm a DJ. I'm just there to play a 5-hour set. So that's why. So when they give me the money, they just give me my money. Let's just say I charge them 5,000 for my set. So they're just giving me 5,000.
Yes.
So my job is I have to What do I do when they give me, I've been playing here, I'm getting 5,000 there, 10,000 there, 5,000 there, 10,000 there. What do I do in this case to be compliant?
You need to declare your revenue.
Okay.
Yes. There's this in part of the Income Tax Act, there's what we call, there's a part where SARS put, they discuss gross income. They discuss what is gross income. There's a definition there, so on and so on. And then SARS actually wants each and everyone to declare their income. Although declaring your income doesn't mean you're going to pay tax. You are basically declaring your income, and then they're doing it for the purpose of determining whether you're supposed to pay tax or not. So you have an obligation to declare your income. Actually, whatever sort of income, you have an obligation to declare it to SARS, whether it will attract tax or not.
Okay.
So even in that case that you mentioned, you need to declare your income to SARS in the form of an income tax return. So according to the tax laws, they will determine whether you're supposed to pay tax or not.
I don't determine it myself.
You don't determine it yourself. You declare your income, and then, but you can calculate yourself if you are. That's why people need accountants. That's why they need tax practitioners on their side. You understand? Because that person is skilled, is there in a position to assist you in calculating whether you need to pay SARS or not.
Yes. And what are the services that you offer in your company? It's such a mouthful. Forgive me, but I'm just going to attempt to say it again. Magoda Ripinde Consulting.
Yeah, Magoda Ripinde Consulting.
Yes. What are some of the services that you offer with regards to tax as well?
Okay. We offer accounting services, which is your bookkeeping services. We offer tax services, which is for companies and individuals, which is it starts from registering you for a tax number for income tax, filing your tax returns as an individual and as a company. And then as a company, there's certain factors. Maybe we'll talk about it in this particular podcast. But for now, I'll just mention like the services that, all the kind of returns that a company must file. There's your IT-14, which is Income Tax Act for the company. It's called IT-12 for the individuals. And then there's tax types like your EMP, which is employees tax, which that's where your pay as you earn and your UIF comes in. There's your VAT, which is value added tax. So we assist you in those things, in filing those returns and complying. And then as well, we also do compliance services, which is in compliance is from starting the company from scratch, which is we assist in company registrations. We assist in complying with CIPC, which is filing annual returns for CIPC. And then there's other CIPC related issues, which is your removal of directors, addition of directors, amendment of director details, amendment of company details, you understand? And then we go as far as, there's a lot of services that we offer. We go as far as doing your COIDA.
How's that?
COIDA is what companies must register for. It's actually the compensation fund. So it deals with injuries in the workplace. When employees get injured in the workplace, depending on the nature and the risk involved in the company. Then if you are dealing in a company where your employees can get injured, then you need to register for COIDA. You need to comply with COIDA.
That's COIDA.
COIDA, yes.
Okay.
It's a compensation fund.
Okay.
The workman's compensation fund. So it assists in the event that when your employee gets injured at work, then we can claim for injury damages.
Yes. You also mentioned VAT. There's so my company that's making maybe 2,000, 1,000 a month profit. Do I also pay VAT Value-added tax. What type of tax is that?
Okay. Value-added tax is a tax that's charged on the supply as well as the purchase of goods or products or services. So a company, there's what we call voluntary VAT registration, and there's what we call compulsory VAT registration. So voluntary VAT registration can be done by companies which make an annual turnover of 50,000 or more. That's voluntary. It's not compulsory. But it starts becoming compulsory, the compulsory value-added tax registration, when a company makes an annual turnover of 1 million or more. Then it's law. You need to register for VAT. Otherwise, you're on the wrong side of the law.
Also, if I make more than 1 million, but I'm not registered for VAT,
you're
then
on the wrong side of the law.
Okay.
Yes.
Okay. No, I think that answers most of the questions. I hope I've actually answered most of the questions that our viewers might have regarding tax. If there's anything, is there anything maybe you think we forgot to touch on regarding tax and small businesses?
I think we've had a mouthful.
Yeah, I think we've covered a lot of the stuff.
Covered a lot, yes.
Thanks for coming, Ignatius. You know what? If you've got any questions, just put them on the comments. We might make an episode 2 of this just to give more information. I think we'll also go more into import taxes and all this other, exporting as well. If people have questions, then we'll make another episode for this. This is the Bindu Business Podcast. Thanks for watching. Please like, subscribe to the channel. Thank you.